No, that's called standard procedures with Facebook. That's not out of the norm by any means. You might have to generate 100 to 150 leads on Facebook before you get someone qualified.
Really? Wow. Okay.
That's just par for the course. I wouldn't let that deter you, but that's pretty stock and standard.
Cole, on a lot I just listed, I think I counted it up. I had like 375 people reach out, and to one person bought it. So,
holy shit!
Yeah, you need a lot. That's why we talk about Facebook as being such an expensive lead channel, right? Is you have to manage all of those leads. It's a lot of kissing frogs before you get one that's decent. What's up, everyone? I think today's call, I've had probably 6 or 7 people reach out saying they're not going to be able to make it, so it's going to be pretty light. Some people sent in their numbers prior to the call. So what we're going to do on this call, Christian, we're going to go over KPIs for the month of November. So end of the month, we're going to do like a kind of a month in review. Talk about what we purchased, what we sold, acquisition prices, how much marketing we did, and then kind of build out a game plan for December. Some other people might trickle in here, but I think a lot of the usual suspects are going to be gone. And then we've had a ton of new people join the program in the month of November. They all pretty much work W-2 jobs. So they reached out to me today saying that they're not going to be able to make it on this call. A lot of them will be going through the recordings, but some of them shared their numbers prior, so we'll go over that. Chris, Cole, Mike, do you guys have your numbers prepped?
I sent mine in.
You're gonna laugh at me. I don't. But let me preface this. We're still switching everything over to the new accounting software. So until I'm doing it in phases. So until I have everything in there, I won't have the numbers. I have a good idea.
Yeah. Michael's accounting is a shit show.
Dude, yeah. I call Christopher daily trying to look at my accounting. It's a mess.
Mike, you should just hire the group I'm using.
What? Who?
It's I could refer them to you. It's a CPA and a bookkeeper in one. They share an office and they work together. They work pretty much primarily with land investors and real estate investors.
Okay, yeah. Well, I'm at this point, I'm 95% done with my bookkeeping, so I'm so close. My CPA also has a bookkeeping service I didn't know about, so I'll probably use that. But I can give some rough numbers for mine. Mail sent, I think we were about 4,300 properties. I think we bought 3, sold 5. We netted. This was our best month, so we netted about 80K, which is sick. Yeah.
Hi.
Nice, dude.
So one was supposed to close today, and I think it's gonna actually trickle over till tomorrow. So we'll see. But
my word.
Yeah. Good month. And then as far as goals for us, it's hard to set goals, I feel like, in this business for month by month. So I did set a goal for myself last month. I said I want to finish out the year with 100,000 net. So I guess that was my goal. It's the start of November was to do 100,000 net, and in the next 2 months, and we should hit it. So
you'll for sure hit it.
Yeah.
Wow, that's exciting, man. Kudos to you. That's a big. What was your previous best month?
Previous month was right around 20,000 net.
So, hey, Preston, what's up, man? We're going through. It looks like you're in a log cabin somewhere. I think you're muted.
You're muted, bro.
You're muted.
I am in a log cabin. I literally just walked in. I'm up in Colorado for the next month. So,
ooh, I got some property you should go look at out there. What part of Colorado are you in?
I'm in Steamboat Springs,
beautiful
Northwest. I got a car. I got plenty of time.
I'm just messing with it. All the properties
around here.
It's a long ass drive, and it'll be snowed in. So what we're doing here is we're doing a little month in review. Michael just shared his numbers. Give him kudos. 80K profit month for him.
Wow.
Pretty awesome, solid. Biggest month to date. Mike, your previous biggest month was not 20K net. That's not right.
Oh, I think my previous month. My previous biggest month was 50K, I think.
Yeah, about 50,000 is what I remember. Yeah. So, dude, kudos to you,
nice,
man. That is awesome. You definitely need to hire a bookkeeper. The fact
I definitely
you don't know your numbers is. Oh man, that's good stuff though. That's really I'm happy to hear that. That's probably not the case for everyone else in this group that November was strong, but I could be wrong. We'll hear what the other bull has to say. Chris, how was November for you?
It was fine. It was decent. What it is. Let's see on the sales. So just to preface it, my numbers, this is just for this call because my numbers do it a little bit differently. I don't count anything until it's like actually out of my account or in my account.
Yeah, let me preface real quick, Chris. So two different things going on here, right? So when you're typically accounting, like if you have a bookkeeper or you're doing your bookkeeping, it's going to be cash in, cash out, right?
Totally.
What we're talking about on this call here, though, is if Chris gets a signed contract to sell a property, we're going to count it for this month just for the sake of this conversation. The revenue might not hit his bank until next month or whatever. And there's a risk the deal falls apart. It's incredibly unlikely. So in our business, we account for both, right? We use QuickBooks, and that accounts for cash in, cash out. That gives us like a true profit. But on like a weekly or monthly basis, we have a separate KPI sheet where we're tracking, hey, we signed contracts for these that we're buying, signed contracts for these that we're selling. And that gives us a quick pulse on what's going on. Because if you're using title companies or other third parties, you're at risk of their timelines. And so your team might be crushing it, but that revenue is not falling until next month. And so it looks like your team's not doing anything, right? And so I think it's important to track both metrics, but for context, what we're talking about here is essentially signed contracts, not cash in, cash out.
There you go. So signed contracts this month on the sell side, it was 132,500 in total. And about 50% of that is profit, or maybe a little less. So
you mean gross margin or profit after all operating expenses?
Gross. So net would be it's something around like 60 something. Yeah, it's all right. And well, one of them is actually my first finance deal I sold this month officially. And that was through, I actually had the escrow company service the note on that one. It was 50% down. I don't need to break it all down. But anyway, the down payment was like $21,000. So I don't think they're going to default or anything. So it was just easy for them to take care of it.
What was your basis in the property?
Pardon?
What was your basis in the property?
21.
Oh, cool. You got it all back in the down payment. Love that.
Yeah. I'm actually shy. I think it's like $800. So in 2 months I'll be whole.
Yeah. Cool.
And then on the acquisition side, I have 57,000 in stuff in escrow, right? Or that I sent in, and then another 75 that I'll probably send in, for sure 30 of that. So right now officially 57, but could be, close to 130.
And how many deals is that in terms of a number?
For the 57, that's 3 properties, and then there would be another 2 to get it over. So it would be 5 in total. A little bit more expensive ones.
How much inventory do you have right now, like listed?
Right now, actively listed, I have 1, 2, 3, 4, 5 properties and that's $150,000 in total properties.
Cool. Good stuff. We'll talk about some other things here once everyone goes through their numbers. Mike, just something to noodle on, and you too, Chris. When we're talking about January's goals, it doesn't just have to be, I want to sell this much or I want to buy this much. It can be broader strokes, things that you're just looking to implement in your business, just ultimately goals that relate to your land business. It's hard to predict, like, I'm going to sell 5 properties next month. You could do that more so on a quarterly basis, hard on a monthly basis, but something just to think about, and we'll do a roundtable on that after. Chris, how much mail did you send?
So it was kind of like the very tail end, last couple of days of October and first week of November, and it was a total of 8,000. I don't really know how much fell actually in November, but that was all the mail I sent. I won't send any out come December. And my goal for December actually has nothing to do with the business. It's just to remove inventory, and I'm kind of just taking the next couple of weeks. I'll move some stuff if I can, but just take some time off.
Yeah. Okay. Love it. From your very busy schedule that you made. So for the 2 hours a day you work.
Yeah. I'm gonna.
I think Chris is he's probably the highest paid land investor. Make $50K a month and work 10 hours a week. That's not a bad gig.
This guy makes $30K an hour.
Yeah, it's ridiculous. All right, Preston, how are things looking on your end? And one thing to note too, we'll go through that deal review in the call after.
Oh yeah, no worries. So yeah, this was my first month with mail hitting and mail getting out. So that was I feel like that was progress in itself. This week I got my first property under contract in Georgia.
Nice.
I bought for 15. I'm still waiting on a couple different quotes from some realtors. I think 35 I would say is pretty conservative.
Okay.
So that was nice. I sent a lot of mail, man. I know you recommended like 5,000 to start. I think I ended up sending like 10,000.
Okay.
And one thing I noticed was, and it was especially in certain markets, but like I've been getting a lot of leads in the last 2 weeks, and it's been kind of overwhelming. But a lot of them I think were just priced too high. Maybe that has something to do with the properties. But when I talk to these realtors, it's not. I think it's a little bit too high. So, I think I'm just gonna. I'm just gonna price more aggressively. I think next month. But yeah, I thought it was a good first month. I mean,
yeah, no, that's awesome. So you sent 10,000 mail this month. Is that right?
Yeah, 10,000 have hit. So I mean, but it's. I mean, every week I'm like every Monday I'm just sending like 1,500, 2,000. But
so a couple of things to note on that.
Yeah.
There's two schools of thoughts out there, honestly, when it comes to direct mail. Like one of them is, hey, let's just get the phone to ring, because those deals, even though they're priced too high, I can guarantee that some of those can be converted. And we've done this in the past. And so, I mean, there's a realm of being reasonable, right? If you offered 30 and you're going to offer them 10, good luck, right? But we just had a deal where we offered the guy 60 and my team got him down to 30. Like, it's possible. It took multiple calls to get that done. But you have to imagine, like, if you sent 10,000 pieces of mail, do you know how many leads you've gotten so far?
No. And I that's like part of my goal in the next week is to start building start tracking this more, like
Cool.
update the CRM. But dude, I would say, I mean, just in the last 2 days, I would say I've gotten like 8 calls.
Yeah. So I mean, from our numbers in our business, you should see 50 to 60 leads from 10,000 mailers. Could be a little bit higher depending on how high your prices were. So some of those leads can be converted. So I wouldn't give up hope, but it is tough when you're a one-man band. It's just a lot of volume coming in. So the other kind of school of thought is, if you are a solo operator and you're going to send that much mail, just be as aggressive with your pricing as possible. So the ones that are coming in are already kind of you're still going to get junk, but it'll make the workload a little bit less for you. I will say, if you are going to be consistently sending that much mail, keep your follow-up boss or your CRM dialed in. That's a must. Because if we look at our business, a lead costs us. I actually have the KPI pulled up here. A lead for November, at least, every single lead that we generated cost us $38. So you don't want any of that stuff slipping through the cracks, right?
No, you're right. You're right
there.
Yeah.
The second thing, though, to piggyback on that, is if you are going to be sending that much mail, it is in your best interest. You will get a higher conversion and you'll keep your sanity if you have Pat Live. And you could get on Pat Live at like a $400 to $500 a month. You'll eat a little bit of that for a couple of months, but it'll save you a lot of work, but also nothing will get missed. The other thing too is, like, they'll track all of the leads in a really simple, we use Google Forms. They'll track all the leads in a Google form, and then you can import that as a CSV into Follow Up Boss, and it makes the tracking important. The way we have it set up with them right now is, if you sign up with their account manager, they'll give you our script and our Google form setup. So something to think about if you're going to keep on rocking that way. If I were you, I probably wouldn't sign up in December, because you're probably not going to send much mail. But come January, if you keep that momentum, I would definitely look into that.
Right. And I think, and one thing I want to learn, and we can talk about it at some point, but I wonder if when you're owner financing these deals, does your conversion rate just go up typically? Like, you're a little bit more lenient on terms, or are you still looking for that same kind of margin?
For on the sales side, or if I'm the owner financing? What do you mean? What kind of margin?
Like, for example, let's say you want to do a cash sale and double your money. Are you willing to take less margin but owner finance?
Dude, that's a good question. Typically no. And this is why the owner finance model really, in my opinion, works best for low end to mid-tier properties. Because in those properties, one, they're very easy to misprice, and so usually you can get a pretty good deal on them. And that mispricing, that inefficiency, means you can buy them for cheap and sell them for a lot more, because the market doesn't really know how to determine those prices. With the more expensive properties, the markets are more efficient, prices are more known. And so when it comes to owner financing, if anything, you actually want to have a lower basis than what you might for a cash sale, unless you've got Daddy Warbucks money and it just doesn't matter and you can take a smaller return. The only thing that we look at for the owner finance stuff is, yes, your return is going to be substantially higher. So you would think that you could accept paying more for the property. The trouble is, and really the metric we look at is how quickly do you get your basis back, right? Because if you are in a business that is cash flow intensive like this is, you got to manage that cash flow really well. And so if you're into properties where not getting your money back for 3 years, that's going to be tough. Because the catch for owner financing is that like that demographic that can't afford a cash sale can also afford a big down payment in most cases. So they need that low down payment. And so if that property that you're going to buy for 15 and sell for 30 on a cash sale basis, you might say, well, maybe I could pay 25 for it and sell it for 60 grand on financing terms, which that math is true. But you're in either situation, you're probably only getting a $2,000 or $5,000 down payment. And so that's the biggest trouble. Your total ROI is bigger, but you got to get that basis back. And so on those smaller properties, I mean, you could buy them for $1,000 and get a $500 down payment like that, and then you're getting your basis back in a few months.
No.
So yeah, I wouldn't. I don't think you could really push if anything, like when I'm pushing my offer price up, I'm going to look at it exclusively as a cash sale and just look to move it faster. So like if I was paying, let's say that you wanted $15,000 for a property that you could sell for 30, and this example doesn't really work. I think a better example is, let's say you're buying a property for 80,000 that you thought you could sell for 160. Come to find out the guy wants 100 for it, but you could sell the property in 30 days at 160. Why not? You're gonna turn your capital quick and get 60 grand. That's not a bad deal. So if anything, if I'm paying more, I'm almost exclusively just looking for a cash sale.
Gotcha.
So I want my money not sitting out for too long. Yeah.
Got it.
Cool. And we'll do the December goals after, once everyone goes through it. Cole, I know you shared your numbers, but you want to just recap those? Cool. Let's do it.
Yep. So I got them right here. So mail sent is 4,762. That led to 5 leads from those 4,700 mailers. 5 leads that I talked to where we had a conversation. We talked about the land, yada, yada. Weren't super hot. Those aren't going to turn into anything. There's a couple more where 1 or 2, actually, no, it's 2 that I made note of where it's like, hey, we're trying to get the property into probate. Let's talk in a year. So that one's fine. I'm actually going to follow up with him in like 2 or 3 months and see what's up. He's in Arizona. Texts, I did send 2,100 texts. That's what got me most of my traction this month. Is I just got tired of the phone not ringing, or people were just calling saying, "Oh, you sent this letter. What's going on?" And I'm like, "Well, we're buying land." And they're like, "Why is this happening all of a sudden?" I'm like, "Because you got a great piece of property. You want to sell it?" No. So that was mailing in the beginning of the month. Then I sent out 2,000 texts in Texas, and that got me to 3 really hot leads in Texas. They ended up being, I was marketing to 9 to 33 acres. Somehow the like 20 or 30 acre people were like, "Oh, that's a small parcel of like a huge piece of land that I have." So working on the 80 acre one, I'd consider that a pretty hot lead. Working on a 214 acre one, but 4 out of the 5 parcels are in a floodplain. So I'm waiting on a real estate agent. And then the other one is 110 acres, give or take. The guy needs to sell it, but he's old and he doesn't know the parcel number, and I can't find it because it's in like a different company that he owns. So a little over 2,000 texts got me 3 hot leads, and then 1 lead for down the road. Almost 5,000 mailers got me 5 not very hot leads. And I don't know, they don't know, but Sumner and I talked, and I'm changing up my mailer to cut straight to the point. Get away from, hey, this is like my dream and goal. It's like, sell me your damn land because I can help you. Let me help you, sir. Yeah, so I've got 14 people in the CRM that I'm having from let's just round 4,700 mailers, 2,100 texts. I got 14 people where there's something going on. We're pulling the property information. We're seeing if it's behind on taxes. We're looking at floodplain, stuff like that. So 14 people where we actually broke it down and just were like, all right, this might be something.
Okay. Good stuff, man. There you go. Yeah, I think so. Just to kind of paint a picture for everyone else in this group, I think there's some value in this. So obviously everyone's got a slightly different format for their offer letter here. one of the things that Cole and I reviewed over the last week was he just wasn't having the conversion that he wanted from his mailing. I think partially you got to have a bigger sample size and send more mail, and that will kind of flesh out the results a little bit more. But one of the things that we really broke down and kind of deconstructed was his offer letter. And if you guys ever want to share your offer letters with me, I'm happy to review them and kind of give my feedback. But when we're making an offer letter, we're making a pitch, right? We're making a sales pitch, right? So if I walk in, door knock on someone's house and make a sales pitch, and it's all about me and my hopes and my dreams, unlikely to convert. And so what we really want to focus on that first page of the offer letter is pitching our service and pitching our value and how it relates to them. You can have a little bit of rapport building and be like Cole had a really nice little line in his letter. It's like, it's 7:59 on a Friday and I'm sitting in my office in Virginia. Love that. Paint a picture, let them know who you are. But that story ends there, and then you move into the kind of the value prop for them. So just something that's a good reminder. I think you'll see a higher conversion by having that offer letter a little more fleshed out. And then you just need more mail, right? Like look at Preston. He sent 10,000 pieces of mail. You're going to get a lot of feedback from that. Even if you misprice things, you'll still get deals in the mark. Like I shared this earlier today in the Discord group. Like we typically see a 13 to 15x return on our marketing dollars. So even if you have a campaign that bombs, you're still going to see a 5x, 4x return on the dollars you spent on marketing. So I've got a lot of friends that run like e-learning coaching businesses, and they use Facebook ads. They're lucky if they see a 3x multiple on their ad spend. That's like, we figured it out. We made it. We're in a business where you have 15x or 13x on the good end. And so you've got a real big buffer to screw up. And so I just say, like, send more mail. You'll get so much feedback from the market and just make decisions from there. I'll touch on my numbers, and then just to kind of give you guys a little heads up, we'll do a kind of December goal review. I got a few properties that we want to do deal reviews on. I actually have a property that I want you guys to do a deal review on. So yeah, we'll all go through that together. So my month was not as good as your guys' month. So I just hired a new bookkeeper. Well, I hired them about 4 months ago. They finally fleshed out all of my books for 2022. I'm honestly disgusted at what they say my taxable profit is. It's a little bit disheartening. So I'm pretty terrified for taxes next year. I think what we should do as well is at the end of December, we'll do a year-end review. If you guys are comfortable sharing your year-end numbers, I think that would be a kind of a fun thing to go through. So we'll wait for December, and then we'll kind of go through all my numbers for the year. But November was crap. Similar to October. I think in October we did like this is net profit after all operating expenses, marketing. I think we did like 55 grand in net profit in October, and then this month our net profit was like $28,698. Gross margin was somewhere in like the $37,000 range or something like that. So like $8,000 or $9,000 in operating expenses. That's like team, marketing, all that good stuff. So on one hand, kind of a cool business where like your absolute worst month is still, 30 grand. But when I look and track this to where we were in September and August and July, it's like we are so far down. Bad. So a little bit disheartening on that front, but we've got some cool things cooking in the fire. But before I touch on those, let's go through some of the other statistics. So 10 properties sold this month. The silver lining here is as the market has slowed down, I am thankful for the fact that we have a note portfolio and a big inventory of cheap properties, because those things are still selling like hotcakes. So we sold 10 properties. The vast majority of those properties were owner finance sales. So we added $1,300 in new owner financing recurring revenue, which is cool. It's about 60 grand of total finance value that we added to our portfolio. We only had like 2 or 3 cash sales this month, so nothing too great on that front. 5 properties purchased. Acquisition cost was $87,500. Mail sent is way down, obviously, with the holidays. We were at $53.45 for mail sent. One of the things that we've been working on and that we're going to be adding to the program here in December is, and this is not relevant for everyone, but it will be relevant as you scale your business, is an acquisitions KPI sheet. So this is a separate KPI sheet outside of the general kind of KPIs for your business. It's a specific sheet just for your acquisition, so you can know cost per lead, cost per signed contract, cost per deal, all that good stuff. So this month we generated 98 seller leads, 52 leads from text, 46 leads from mail. We spent $37.52 and 16 cents on data and mailing this month. Cost per lead was $38.28. contracts sent were 10. So 10 contracts sent by my team. We consider a contract sent just anything that we send through like DocuSign or what have you. We had a 60% sign rate, which is actually pretty low. We're usually like at 80 to 90. So only 6 of those contracts got signed. Some of them might drop next month. 5 of those deals were sent to title. So our cost per contract for this month was $625.36. And then cost per deal closed was $750.43. So when you look at, again, like the cost for a deal, when you factor in all of your marketing expenses, $750 to go make 12, 15, 20 grand on a deal. Again, that's like where the return on ad spend is just ridiculous in this business. So yeah, an okay month on the acquisitions front. We've got a ginormous inventory of properties. We have 38 properties actively listed right now. So that's my one concern as the market slows down. Like, God, some of these properties, just get them out of my inventory, man. I'm just ready to see some new pictures on my website. But we've got some interesting properties in our pipeline, some pretty good deals. Just waiting for them to drop. But we have a lot of like potential unrealized pipeline profit. I mean, probably 400 to 500 grand of pipeline profit that's just sitting there. It just needs to start dropping. So I think that what I've seen in years past, December is going to be slow. You guys can't really expect anything but December to be slow. So that's going to be the norm. You'll still get some deals here and there, but like Chris is doing, like take the time off if you need to. For you newer guys, or for the guys that are really trying to push it next year, take some time off. But what I'm doing, what I would advise doing is start building out your mailers in December. Don't send them out to like the last week of December. Let those hit at the beginning of the year. Usually January is a really strong month. So usually at the start of the year, I don't know if it's New Year's resolutions or what, but everyone wants to buy property and everyone wants to sell their property. So that's going to be a really good litmus test for us to understand has the market really softened as much as we think it has? Because if January is ripping and roaring, we know that things are going to be somewhat okay in 2023 for the most part. But if January and February and March are soft, when they're typically not, that could be problematic. So things are is confirming our indication that things are slowing down. It's really hard to get a good gauge when you're in the holiday season because by nature, holiday season is just slow on its own. So yeah, that's what's going on there. In terms of exciting stuff in our pipeline, as you guys have heard me ramble on about that subdivide deal in Texas, the monster deal, the buy for $560,000, sell for $2.5 to $2.8 million. We're at the very finishing line for securing financing on it. It looks like we got the financing all squared away through a local bank, which is my first time going through that process. It's actually way easier than I anticipated. And there's going to be some cool strategies that we're going to be rolling out next year around financing. I think there's some cool opportunities in terms of using financing, obviously for subdivides. But if you have higher ticket properties north of 100 grand, these smaller banks will lend on them. And so if you're doing a deal, like go back to that deal with you, Preston, right? That deal where it's buying for 100, selling for 160, a shit cash on cash return. But if you're using the financing 25% down, now that 25,000, you're selling it at 160. So you got a $60,000 profit on a $25,000 investment. Your cash on cash return is gargantuan. And so the relationships that we've made with these banks, it's pretty darn straightforward. Once you get in their ecosystem, you're pretty much good to go. And I think there's going to be an opportunity for us to kind of funnel people to them. And so we'll kind of open up a back door for you guys is the hope. Now it's not going to be in every market. Like right now, this deal's in Texas. They'll cover a lot of the state, but if you guys are working in other states, it's the same premise. Though, go find a small regional bank. You got to have all your ducks in a row in terms of your personal finances. It's a pain in the ass. It's like getting a mortgage. But once you're through it, you're good to go. And so it's a huge unlock for value. So this kind of paints an interesting picture of how these deals go when you're working larger deals. So this deal came into our pipeline, I don't know, 5 or 6 weeks ago. Things were looking good. They said, send us a contract. We mailed out the hard copy. Then they fall off the face of the earth for 4 weeks. Don't hear from them. Don't open any of our emails. Everything's falling on deaf ears. So what we did is we went and used direct skip. The direct skip is what we use for skip tracing. We went and skip traced them and their immediate family. So it gave us 10 phone numbers. And then I had my acquisitions team text and call all those phone numbers. We finally got the right phone number for the right person. My acquisitions team had a call with him this morning. They're pretty much good to go. The property's been with an attorney for the last few months. They're doing a title report on it. He suspects that he's got family members on title with him, although it doesn't look like he does. But the property's been in his family for 3 generations. So his concern is that he might have other family members on it, which isn't a big deal if they are, just a little more work for us. But I think it's just him on title. So he said, give me a few more weeks until I flesh this out and we'll be good to go. what we're going to do in the interim, kind of an interesting strategy. I'm a big believer in, if someone says follow up with me in a month, follow up with them in 2 weeks, right? Like cut that time in half. But when you're following up, especially on a deal like this, or really anything, whether it's a buyer or seller, you've always got to follow up with an intention. I don't want me or my team just calling and saying, hey, is it ready? Not very valuable. So if you follow up with a real reason, it's a totally different conversation. So what we're doing in the background is I'm going to pay for a title search to get done. I reckon the title search will get done faster than his attorney. And then I'm going to share that with him in a week. So we'll get that done in a week. Then we'll call him and say, hey, we got the title report for you. And then that should kind of expedite the deal. And we're bringing value to the table, right? So it gives us a reason to follow up. In these situations where the sales cycle is longer, it's like you don't want to let time elapse, but you have to be tactful with your follow-up. So having an intention for it is super important. So yeah, that's what's going on in the land business. I suspect things will probably be about the same for December. We ran part of the reason that we had 10 properties sell is we ran a big Black Friday special. And one of the interesting things that we did for that Black Friday special is we've been experimenting with drip texting in our business. Now everyone's all about texting to sellers. Well, we've been doing drip texting to buyers. And so as I touched on in last week's call, we have a handful of new chapters being added to the program. Each chapter is going to have a handful of modules sitting underneath it. One of the chapters that we're building out is using drip texting for buyers. So we've been using something called Simple Texting. It's one of the few platforms that you can send out drip text. And so we used that for Black Friday, and the engagement was so much higher than what you'd ever get with email. So it had a pretty big sell-through rate. So we'll touch on that. We've been using it for repricing as well. So when we reprice a property, anyone that's reached out in our CRM, they're tagged by that parcel number, and then we'll drip a text and say, hey, the price dropped by 10 grand, yada, yada, yada. So some kind of exciting stuff on that front. All right, cool. Let's circle back and do December goals. We'll start at the top. Michael, what are the goals for December?
Yeah, outside of like numbers, well, outside of property selling and buying, it's out of my hands. I am going to send some mail this month. I'm definitely going to like bring it back a little bit, but I'd like to send about 4,000. I think it might fall on deaf ears, but I'd still feel better getting some out. Mm-hmm. And then you guys do texting. I think I'm going to try hiring a cold caller for me and just try it for a couple months. Sumner, we spoke about this a little bit, but I have 70,000 pieces of data that I've previously mailed. Maybe I don't know what the number is. Maybe 30% of the people are actually getting those letters or opening it. I don't know what that open rate is, but I'm sure I'm missing a big chunk of them that, maybe if somebody called them, they may not have gotten the mail, but they may answer the phone. So yeah, I'm going to try and just hire a cold caller, train them, and then have them just reach out to the previous people that we've mailed and see if we get any new contacts from it. Okay.
Mike, I know we've got a call later today. I've got some stuff to touch on that as well. I'll save it for after.
Okay. Yeah, but that was my goal. Hire and train a cold caller and finish my bookkeeping.
Okay. Chris, how about you, man?
That's a great idea. I'll add that to my goal. That sounds good. Yeah. Hire a
bookkeeping or a cold caller?
No, my books are fine.
Okay, well, all right. Then I'll make this public service announcement out loud then. I would not hire a cold caller.
All right, then I'm not hiring.
For Mike and Chris, you guys need an acquisitions manager, not a cold caller. Keep my peace. Okay. I'll talk to you guys about that later.
I need a cold caller.
Okay. No. All right, we'll talk about it later. But no, honestly, the goals are just to move some inventory that I've been sitting for a little while. Again, I don't have many properties, but there's just a few that I don't want to hold. I don't think are good buys. I've kind of switched my strategy on what I'm buying. When I first started in the year, it was all residential infill lots, like a lot really, really small, like 10,000 square foot lots. I didn't care because the demand was there. But now that builders have slowed down, I've really, paid attention to which ones that I'm buying. And I still have a couple of those infill lots that I need to get rid of. And it's only going to get worse in my opinion. So I want to get those gone. And then, yeah, just, enjoy the year. It was a good year. I know it's going to be slow this month. So take the time, enjoy it. And then I am putting together lists to go out a week before December ends so that it's January.
Okay. Yeah. Great. Preston, how about you?
I haven't really thought about it, to be honest. I've just been focused on getting my mail out. But now that I'm starting to lift my head up, I think it'd be awesome to sell this property. And I think like you said, I think pricing some mail would be a great idea. for January, and then just like get my CRM like infrastructure solidified.
Yeah.
I think that's
Chris, are you using Follow Up Boss?
Am I?
You're not. What are you using?
Excel.
My guy, come on. Excel will get you far, but I would preemptively look into Follow Up Boss. Again, you can roll it out in January. I mean, everything in the course obviously is built around Follow Up Boss. It's just so much better, man.
I'm gonna do it this week probably.
It's $69 a month. It's a very small expense.
Yeah.
And if you could even eke out one additional deal a year, which I guarantee you will be able to from having it organized, it's in your best interest. The other thing is, as you start getting to the point where you're bringing on a team, you need the reporting functionality in Follow Up Boss. So you can track your team's calls, you can listen to their calls, you can see their emails or texts. So that activity logging is really, really important. So I would focus on that. And if you have any questions about getting it set up, let me know. I had another one of our students reach out yesterday that he had questions around it. So if you do, give me a shout.
Where are all these other students, by the way?
I don't know, man. None of them freaking like to show up.
Join. I'm ready to meet these people.
Yeah, I know. So that's what I was saying at the beginning of the call. A lot of them, at least as of recent. So Christian joined last week. Christian has a little more flexibility in his schedule. Most of them are W-2 employees. So a lot of them like the reality of getting on a call at 12:30 in the afternoon. A lot of them are East Coast as well. So call at 3:30. Pretty unlikely. But I'm always like, do they know there's a call? Like they get the calendar reminder. I put it in Discord. I don't know. So we've had people that join the group that haven't showed up to one call, and I feel
that's funny.
I feel it. I mean, I reach out to them. They're like, "Yeah, I'm doing great. I'm going through the program." I'm like, okay. What's funny is it's all the same faces every single week that get on the call.
Yeah.
I think there's a correlation between results and getting on these calls. It's like it's the 4-minute mile, right? You hear that Mike did an 80K profit month. You're like, holy shit, that's possible for me. But also it's like real-time feedback. Hey, I needed this deal review. I need this figured out. I think like the learning on your own thing, I don't know. I don't think it's a good idea, but I can't force people to go on the calls. A lot of the people do go and listen to the calls after once they're recorded. I get people that reach out and they're like, hey, I loved what you said in that call. So I'm like, I know you're there watching, but I don't know. Anyways, interesting stuff. Yeah. Christian, we're going to touch on you for December goals as well. So have your mind ready. We'll go with Cole first and we'll touch on you. Cole, it's here, man.
Yeah. All right, cool. So December goals, I want to at least close the deal. I mean, I got the one in Washington. I looked at it. I was pulling up. I'm like, all right, let me go back to those comps again. And I put in the legal, whatever, lot 35, and it already another land investor, some lady named Elise, had it for sale for like $20,000.
I know Elise. She's bought a property from us before. Liberty Land Sales.
Yep. Oh yeah. So, and then one of them said it was still listed. The other one said sold. So I don't know. Just working on the next ones. I guess the guy just sent back the letter, just signed it. It was like, let's see if he sends me $13,000. So, oh well, yeah, I'm gonna get some mail prepped for, like you guys were saying, more than me. So I'll get it prepped for last week in December, send it out, find a lot more markets. That's something that I've been working on getting a little bit better at. And then I'm gonna keep texting, and yeah, just looking at markets, texting, getting mail ready. And then just following up with people, even if it's a little bit too soon, I'll still talk to some people who I need to follow up with. I'm still, and then working on the deals that I'm working on now in Texas. I have, has it been hard for you guys to get comps from realtors? Like, do you tell them anything special? Or do you just call 20 and then maybe one says yes? How's that work?
First game. Like we have a property in Texas that we'll review on this call here today. This call is going to run a little bit longer. Is that okay with you guys?
Yeah.
Yeah, we have a property in Texas that we're trying to get comps for, and the vast majority of them are like, sign my buyer's agreement or pay me $500. I'm like, no, fuck off. So it's a numbers game. You got to reach out to a lot of them. If you find someone worth their salt, though, they'll give you the call.
Cole, there's also nothing wrong with not using a flat fee MLS service. Like if you find in a market that there's one realtor who just has dominated that market for the last 20 years and they've sold everything that's out there, they have some for sale, they probably have a good idea as to really what your lot is worth. They may have some buyers out there. It's totally fine if there's like really one realtor that's dominated your market to just call and be like, hey, I'll give you this listing if you can help me out. Yeah. I do it all the time, and they're usually really knowledgeable. So, and if you tell them, hey, I'll give you this listing if you help me out with it, and they give you the pricing and it doesn't quite work for your numbers and you don't close on the deal,
No harm, no
it's
foul.
no harm, no foul. Like, it's not like you're just using another realtor. You're just not closing on the deal. That's part of their business. They do that all the time.
Okay, so having them list it, what do I need to count for money wise? Doesn't it come out of the buyers paying for like a 3% if there's just
3%. Oh, sorry. Go ahead, Sumner.
Well, yeah, I mean, you're going to have to pay them something. It's going to range wildly for lands.
we talked about this. I
Yeah.
remember from the course you said you can up it to 5% just to get them to be more excited, right?
Yeah. So you could, you could do it anywhere in the range of 3 to 10%. Honestly, you could do 2.5%. We've gone low in some cases. I think the lower you go, like, you definitely do pay for what you get for to some extent. A realtor that's willing to take a tiny percentage might not be worth their salt. And so, like, you do want to compensate them fairly. But if they're asking for 10 points or something, that's a little bit absurd. Then it also depends on the price point of the property, though, right? Like, sometimes what we've done is just a straight flat $1,000 or $2,000 if it's a cheaper property. And so you could do that as well. But yeah, dude, if you find a realtor worth their salt that's good at listing land, they're going to be a value to you. They'll help sell the property faster. You won't have to work the leads. They might even be able to sell it for more. You'll get the inside information. Nothing wrong with using a realtor. You just have to have great discernment in terms of who you choose to work with.
Sure.
I probably
To
a
piggyback
third of
off
my
that-
properties.
Oh yeah.
Are
I'm sorry. I'm probably going to say
realtors.
what Christopher was saying. To piggyback off that, Cole,
Chris?
if I like, Christopher and I are buying a lot in Texas right now. It's in a county we've never worked in. We're buying it together. We just went and found the realtors, worked there forever. I know nothing about this market. He knows a lot more than me. I'm totally fine, just having him list it for me. If it's in a market that I've worked in a bunch, I've got a pretty good idea about the property. But if it's your first one in that market, just give it to him.
How like what percentage are y'all selling with realtors?
I've never done anything over 3% of the sales price.
No. How many of your deals are selling with realtors?
Maybe 30%.
Mine's about a
25.
third. Yeah,
Yeah.
somewhere around there. I use them pretty often just because if I've only had one like kind of irritating experience is actually like right now. I had a property listed for like 120 days and I was like, fuck, it's not selling. Maybe there's something wrong. Like, I don't know about this area. I was like, all right, I'll give it to a realtor. He had it for 7 days. The lead came in. I had to send it to him because he had the listing and he's closing. He's double ending it. I got to pay him his commission for a lead that I sent. But it happens. But the rest of them have been great. They've either brought their own leads that I wouldn't have gotten, or because I hired someone, I made an extra 20 grand on 2 different properties. So extra 40 grand because I was going to underprice it. And he was like, no, it's going to sell fast. So there's just markets I didn't know.
Yeah. So, well, I'll touch on that for my monthly goals. But yeah, it's a great point. I would not be gun shy to bring on a good realtor.
Okay.
Cool.
Yeah. I figured out how to get the number one in the market mirror strategy. Like, you pull up and you copy and paste all the listings, and then you can sort it on Excel or Google Sheets to see which one, like, this person sold 24, this one sold 19, this person's in 6, and then all the 1s and 2s. So I have those people. Do they make you sign the agreement in the front end? You said that was the BS. Usually it's like, hey, when the time comes, you.
Yeah, I usually just going to go on good faith. Hey, comp it, and we'll sign the agreement. I'm not going to. That's too much. Like,
yeah,
I think that's an overkill. And that's few and far between, but you do get it. What I hear more often is, pay me $500. I'm like, are you out of your mind? Like, you're just going to send me comp. I'm just looking for confirmation of what I already know. Like, a lot of times they just send me comps that I've already seen. If it's a non-disclosure state like a Texas state or a Utah, that there can be real value. But yeah, good stuff. Christian, I know you're just getting rocking and rolling. You've been in for less than a week, but do you got anything kind of roadmapped out for December in terms of goals?
Can you guys hear me?
Yeah, I got you.
All right. I'm on module 4, trying to finish it
Oh.
out.
Well.
And then trying to finish it out. I still have another job. I'm a commercial real estate broker. And so I still have to deal with those deals, but I figured if I finish the module by December 15th, then I can, maybe earlier, 10% a day, so maybe like December 10th. And then if not sooner, actually. And then I'll try to find a market during the holidays and then get a mailing list sent out for the last week of December. Yeah. And then as for Cole, have you tried like Secretary of State for that 110-acre lot to see if there's a deed of trust on there or a title on there? Do you know Secretary of State is?
I've gone in there for like business stuff, like to find LLCs and things like that.
Yeah. So if you go a bit further, sometimes I can see all the properties that are in there. Also, I have land vision from my company. If you send me the business address, it might be under there, and I could see, because what I do in industrial real estate is I look at the property and I see what else they own, so I know everything that they own, and that way I can go for those properties as well when I'm on the call, so I'm more knowledgeable. It might be under there, and I could see all the properties you own. So I could help you out with that. I'll just send it over to you. I have no interest, obviously, and that might work. And then other than that, that's about it.
Sweet. Okay. Yeah. One thing just to piggyback on there. So when it comes to the program, we've had some students that's like, I'm going to power through it. We had one guy that literally did it in like a week and a half. It's mind bending. I don't even know how we listen to that much of me talking. It's like 50 hours of me rambling. But what I would encourage doing is kind of learning as you go, right? So like when you're going, for example, for the market selection, in conjunction, be applying the stuff that you're learning in the video. So going and selecting a market. I think an ideal kind of trajectory would be go and source, a dozen or so markets in the beginning of December. Just build out, like we talked about in the program. I don't know if you've gotten there yet. You most likely haven't, but just put a Google Docs sheet together, have it be your Market Monday sheet every Monday. Just go in there, pull a few markets, go and review them. Kind of like this living, breathing document of markets you're looking at. Come like the tail end of December, you should have a good read on like, hey, this is the market that's standing out. This looks like a place I'd want to send mail. Pull the data, get on data tree, pull the data, prep the list, and then try to get that out so it's hitting in the beginning of December or beginning of January. January is an interesting month, both on the buy side and the sell side, man. People want to sell property, people want to buy property. So you kind of want to capture some of that excitement. So yeah, I would try to have your list in a good state come towards the end of December. As you're working on that, as you're looking at markets, as you're working on the data set, if you ever come on these calls and you want us to help you and kind of walk through it with you, we're always happy to. Like Preston said, probably about 1/5 of the people actually join these calls. So you usually have all my attention and everyone else as well. So it keeps it pretty easy. Cool. I'll touch on my goals for December. So a couple things that are related to the land business, a couple stuff outside of the land business. So I would like to have the contract signed for this subdivide and the financing secured. We'll see. I don't have much control over that. I've got control over the financing. We've got everything done on our end. So we're just kind of waiting there. The contract signed. Hopefully it's in December. Don't really know. The holidays might slow that down. One of the things that I've been working on is what I call my dream list. And this is kind of a new idea that I'm testing in 2023. So as Michael mentioned, 70,000 data points. I've got a ton of data points as well. So sourcing out the markets that I like the most, the areas I've had the most success in, the areas that I think are going to do well over the next year, and becoming a relevant person in those markets by continuously advertising. And so one of the things that I'm looking at doing is building out new direct mail pieces through like robotic handwriting. I think the open rate is going to be substantially higher, testing some new mailer strategies, like putting money in the envelopes, new envelopes, oversized envelopes, legal envelopes. So starting to recycle these data sets and get a little more nuanced in how I'm touching these people and continuing to show up over and over again. Because there's some markets that I know if I get one of these deals, it's a slam dunk. It's a no-brainer. So I'm willing to spend 10 grand, 20 grand to get that one deal locked up, right? And I think over time, if you look at any other industry, like omnipresence is super important. Showing up on multiple channels builds rapport and it builds trust, right? So if I can cold text them, I can have my acquisitions person following up in Follow Boss and send them bespoke letters, I think it'll do well for us. So I've got, I think 6,000 or 7,000 pieces of data in that dream list currently. So fleshing out that list and then having my new mailers kind of set to go out in January. I'm going to do like a kind of a New Year's little marketing piece on that. I would like to move some of the properties that we have in the inventory, some of the stale inventory. So like Chris and Michael were mentioning, I think some of these properties I'm actually going to get listed up with realtors. I just don't know these markets well enough apparently. And I made some I don't think they were bad buys, but I probably should have known a little bit more going into it. And when the getting is so good, it's easy to make some miscalculations. And so there's some deals, for example, that we bought at 45 grand that we thought we were going to sell for 110. and we might sell at 70 or something like that, 65 grand. I just want to get those things out of here. We'll make a little money, get them out, kind of clear it out for the new year. Some of the bigger stuff we have in inventory right now, this is kind of a weird nuance, but I'm just sliding up the price on it a little bit in hopes that it actually doesn't drop until the beginning of January, just so I don't have that on my books for this year. So some of the stuff that I'm like, I know it's a good deal. I'm raising the price a bit just in the hopes that it drops a little bit later. We don't need the cash now. I'd rather not hit my books this year. And speaking of taxes and our books and whatnot, two things that I'm doing that I would really advise everyone else to look into. I'm pre-buying mailers and I'm pre-buying data. So I'll spend 40 or 50 grand with direct mail to pre-buy a lot of those mailers for next year. You could spend whatever makes sense for you. But if you have any profit on your books and you know you're going to be using data and mail, get it off your books and just buy it now in bulk. You also get a lower rate, right? And so same thing I just learned in Data Tree, you can pre-purchase data. And so you don't have to go and actually pull the data. You can pre-purchase it at a discounted rate and then just work against it throughout the next year. So those are two things that I'll be implementing. Good way to get some money off your books. I've got a meeting with my CPA next week. If you guys have CPAs, meet with them before the end of the year, kind of go through the health of your business, how much money you have sitting in terms of profit, figure out if there's anything you can do to get some of that off your books. I'm also, so a couple things related to this group. As I mentioned before, we've got a handful of new chapters being added to the program. One of the things that we're looking at releasing here in January throughout the next year, I'd be curious to get your guys' feedback on this, is 2 accountability calls per week opposed to 1. I know we've got a small sample size here. Is that something you guys would find valuable, or is that overkill? What are your thoughts there? Cole says yes.
As a newer guy, I think that'd be great. You know, I'm not the Bull Brothers though, just raking in cash. So.
Yeah, dude, these guys, they should be on an island sipping Mai Tais. They don't even need to come to these calls anymore.
That's just untrue. Are you kidding? I learned so much from this stuff. No, it's not true.
So what do you guys think? Bull Brothers, 2 calls?
Yeah,
I would
2
imagine.
calls is cool with me. I would probably, sorry, Chris, shut up. But I would probably make one after 5 p.m. for the W-2 employees. Yeah, that's the only thing.
Yeah, so I think that's kind of been my thought process. And we've got majority of people are actually on the East Coast. So I have to find a time that works within their time zone. You know, 8 o'clock at night might be a little too late, but we're going to get some slotted in. In terms of a preference for days, do you guys have a day that, I don't know if there's any cohesiveness here in terms of a day that works for all of you guys, but is any thoughts there? I'll take a poll in the group as well.
Any?
Okay.
I gotta check my schedule.
Okay. I wasn't talking to you, man. You're essentially retired. The next thing is, so we've been working in the background on a new thing that we're launching called acquisitionmanager.co. Separate entity, but it'll kind of be wrapped into all of this. So we've built out a 4-week course essentially that's been training acquisition managers. So we've already placed 2 of those in people's businesses that are in the program. Something that we're looking to continue to do throughout the rest of next year. As you guys have heard me ramble before, there's no hire that is more valuable in your business. Like our acquisitions manager this year, and these are all overseas acquisitions managers, you're looking at about $12 an hour for them. And we do a comp plan that's based on a quarterly goal. So for example, our acquisitions manager will probably make about $42,000 this year, all factored in with commissions and whatnot. And they brought in a little over like $1.2 million to our business. So you can see the math on that just makes a whole lot of sense. There's some businesses out there in the land space and elsewhere with virtual assistants where they do this weird hourly arbitrage. That's not my style. I think that's borderline unethical and just bizarre to be arbitraging humans' time. So it's just a flat fee that we're building out. So that's something that we're looking to have fully completed and launched come January. Website's being developed currently. We're still fleshing out all the kind of components of the course. And then if anyone already has an acquisitions manager, it doesn't really relate to this group here, but we might be pushing other people's acquisition managers through the program if they already have one. So that's something that we're pretty excited to launch as well. I think it's the big, like once you have solid footing in your business, let's say you're 6 months, 12 months in, and you've got a consistent pipeline of deals coming in, you know how to stay on top of your mail, you know how to select markets. That is the next logical step in your business. And for a long time, I thought it was dispositions manager, which is like someone to sell your properties. I'm eating my words on that. I was dead wrong. It's acquisitions all freaking day. And it took me so long to wake up and see the light there. But it's incredible what you could do as a solo operator with an acquisitions manager and Pat Live. You could run a business that easily does $750,000 to $1 million a year in profit. So excited to launch that. What was the other thing I was going to say? Oh yeah, this is unrelated, but we sent out a feedback survey. When you guys get a chance, 4 out of the, I don't know, 15 or 17 people have filled it out. So if you guys can fill that out whenever you get a chance, we're looking to take your guys' feedback to heart and make the implementations in December and rolling on throughout the rest of the year. As we talked about in the beginning, when everyone got signed up, like this is an evergreen community. It's also an evergreen program. So it's ever evolving, right? And a lot of the stuff that I've been rambling here about the experiments we're running in our business, that's where we get the education from and we build that out into modules. And so I'm constantly iterating and experimenting my business, and I want to take those teachings and feedback and put it into the program. But I also need to make sure that everyone's baseline is being met. The people that are going through the program feel like they have a really solid footing. So I mentioned all the new chapters we're adding in. We're also adding in a quiz component. So anytime a chapter is finished, there's just a general quiz that relates to the information in there. You don't need to get it right to pass on to the next section, but I think that's going to help with retention of the information, just to kind of better encode it and embed it in your minds. I think getting on these group calls and talking with other land investors is hugely valuable. Fortunately, as we know, not everyone does it. So we're just trying to figure out more content and more systems we can add to the program to assure people's success. So yeah, that's all I got there. Deal reviews, baby. Let's look at some freaking deals. Preston, could you drop that deal in the chat in here? And if anyone else has deals that they want looking at, I know Cole has a deal that we can get pulled up, and I've got a deal as well. Hey, Mike, would you mind throwing up? Oh, Chris, we'll do your deal as well.
What's up, Sumner?
Would you mind pulling up Preston's deal in the chat and sharing your screen? I'm going to go grab a water real quick.
Yeah, you put it in there, Preston?
No, I'm gonna throw it in there right now. Sorry, let me grab the info. One sec. Okay.
What county is this in?
I'm throwing it in.
Okay. Wilkes County, North Carolina. Okay, let me see if I can share my screen. All right, what do we got? Wilkes County, North Carolina. Let's see.
Are y'all still seeing the those rural infills moving?
Yeah, they're moving much more than like a standard infill.
Yeah. Cool.
Yeah, same with mine.
So what is this? It looks like a 10-acre lot.
Yeah, 10-acre, no HOA.
That's an easement going through your lot there, it looks like.
Yeah, I think.
What so this is in Wilkes County. What town is this next to? I'm gonna pull up.
This is like
Parsonville, North Carolina.
It's right by Wilkesboro, but it's just north of. That would be the major town to be by.
Maple Springs.
Yeah, just north of Maple Springs. This is a Florida guy. It has been interesting. Just I would say like 80% of the people that have reached out to me are from out of state owners.
You want to know something funny, Preston? So I quickly went way back in the day when I first started working in North Carolina. I noticed the same thing. All the owners are in Florida. They got pitched these things back in the day, bought them. They've owned them for a few decades. They're pretty uninterested in them. So I used to just filter my list and exclusively mail to people that own land in North Carolina and lived in Florida, because all the good deals we were getting were from Florida residents. Dude, it's almost the majority of the list is those people. What's the acquisitions price on this?
23, and then he wants 25.
He wants 25. So
Yeah.
There's just looking at for sale. There's
Right.
this one that's for 80. That guy's out to lunch. This one that looks similar to yours and is actually close to yours just went pending. It went pending in a month. He had it listed at 37.5. Without looking at the sold comps, I would think that that's probably a pretty good comp.
Yeah, pending is going to be in this market. Pending is going to be
That's like everything. Yeah. In the last 3 months, a 30-acre for 5 or 30,000. Sorry, a 5-acre for 30.
Do you know the assessed value on this?
Yeah, the assessed I think is 29.
29.
Yeah.
So North Carolina usually assesses their properties pretty high, but that might be relatively fair.
There's this 10-acre that sold for 70. It was off market. I'm not too sure what that's.
Dude, the comps kind of all over the place.
7-acre for 36.5 that sold. That was like probably 9 months ago. For me, without like just very quickly looking at it, this one that went under contract at 37.5.
Yeah,
looks to be pretty close. Of a
is
comp.
that all right, let's just say it is. That's a good comp. Is that a margin that y'all would pursue?
If I'm basing it off of 37.5, I would want that at probably like 17 or under.
Right, hold on. This one, the one that's pending, has been up for 817 days.
No. Oh, that's something else. No, this one had been up for 42 days.
Okay, so 42 days, and what's this? It's selling at 36.
37.5.
Michael's like more risk adverse than me. Apparently, I would pull the trigger at like 19, but I wouldn't be any higher than 19.
Yeah, and that's what I'm finding with like a lot of these people in Wilkes County. Like I'm just like $5,000 too much in a lot of them. But
yeah, I mean, this is like a good double close candidate, right? You could probably tie this up and sell it in like what that one sold in like 40 some odd days, get it on a contract for 90 days. North Carolina's got really favorable laws for like posting on the MLS and whatnot for properties you don't hold title to.
Yeah.
And now buying it at 20, a $17,000 spread looks pretty juicy. In this market and with attorney fees, you're probably looking at like $1,500 to $2,000 to close the property. I'm gun shy at the $20,000 price point. I think the other thing too is this is something I've experienced in North Carolina with the couple of deals we have out there. You're not getting anything closed in less than 40 days. Super slow. So I'm like, the market could really sour. We just don't know, right? So I would.
Yeah, here's another 5-acre that's been listed for. It just went pending, but it's been listed for 2 years almost. That would scare me. Even though yours is a 10-acre, I would still think you're right around this 35. This 35 number is kind of what I'd be.
Yeah, I think 35 is pretty darn fair. So, I mean, he wants 20. Is that what you offer?
We wanted 25. My offer was 23.
Yeah. Okay. So double close at 20 or 23 for sure. I'm not putting money in that deal at, like Michael said, I don't know, 15, 17, anything over that. I'm too gun shy. And you got to anticipate, let's say worst case, you lock it up at 15, you got $2,000 in closing fees, $500 in photography, 20. So yeah, 17.5. Right now it's like, I need A+ properties and A+ markets. And part of that also, like an A+ property means that the acquisitions price is A+, right? So anything that's giving me just like I like being as logical and pragmatic in this business as possible, but intuition is important, right? When you get a deal and your intuition is just like, I'm listening to that. Where before I might have pushed through that, but I wouldn't. There's margin here. There's a deal here.
That's a double close. That to me has double close all over it.
Long.
Yeah.
That 25, double close it at 37. I mean, there's after all fees, you're going to make $8,000 or $9,000.
Yeah. I got
right now. It's like what?
I got to figure out how to do that.
So yeah, if you need assistance, I mean, obviously,
I can talk to Mayor.
Yeah, Mayor's the regional expert here. I've done a few double closes in the past. I mean, the best thing you could get from Mayor obviously is his contract. You could JV it with him, although I don't know if there's enough margin to where that makes sense. I'd probably take the deal yourself. Really, like the biggest thing with a double close outside of having the right contract, which he just made up his own, and maybe you could get it from him or pay him for it or whatever, or make your own. Like you pay a lawyer $1,000, probably draft you up one that you could use over and over again. With that deal though, or with any double close deal, it really comes down to disclosure and the phone call. So when you have the phone call, like the deals that we did in the past, I mean, we were so open and honest. Like, dude, we're here to make money off your property. The take rate was actually pretty high, and the way we got the take rate high is the non-refundable earnest money. that's just going to put you in a really good spot. Like, and having a realistic timeline, I think 90 days is a pretty fair spot for all parties involved, and you should be able to move it in less than 90 days. But toss this guy $1,000. I guarantee you can move the deal, or $500, whatever it is. We used to start really low. We'd be like $200 and then inch our way up from there. And we had people that took that all day long. We weren't sending it to title companies and putting in escrow. Like, we would literally just mail them a check. Probably not how you're supposed to do it. So yeah, I would talk to Mara. If you need any assistance though, in terms of like how to structure the conversation, I'm more than willing to help walk you through that. But when it comes to the contract, I would talk to Mara. He knows more than us. If there was more margin, you could JV it, but probably not.
Yeah. Do y'all think that will be like a more useful tool in the next year with this market?
Yeah, dude. So interesting that you mentioned that. So that's actually something that I should have tagged on to my December goals. And that's one of the deals that we'll review on this call all together today. Is I have, like, off the top of my head, 3 deals that are just like obvious double close scenarios. And so it is an exit strategy I'm going to use more. Am I going to pivot to a double close business? Hell no. There is merit to closing on deals. There's a lot of value there for the sellers and for just sleeping easy at night. But, you know, every month we're getting probably an additional 50 grand to 100 grand of potential double close profit that we're not doing anything with. And so for the deals where my intuition is just kind of rubbing me the wrong way, it's a double close. That's our exit strategy right now. That or a financing play if it's a big enough deal, getting bank financing. But that's kind of a separate thing. But yeah, double close, I think it's going to become more and more important. We're building out some modules around it. I think what we're going to be doing here, it's not going to coincide with the right time for you in this deal, but it's putting together. So one of the things that we're adding to the program is, like, we gave out kind of like guides for how to put together your offer letters. We're going to go and actually just give you guys offer letters that you can use. We're going to ask and pray that you please change them to your business. But we're going to be uploading offer letters for range offers, neutral letters, and blind offers. Instead of having like the guidelines, we'll just have a straight letter, and then you can go in and edit it. Please, if I see the letter in my mail and it's the same letter in there, I'm going to be angry. So don't do that. But just make sure you edit it to yourself. But one of the things that we could do as well to kind of consolidate costs is, as a group, go and purchase a double close template, have an attorney drafted up, and that way we all have a rock solid contract we can use. So if that's something you guys are interested in
on that. Yeah.
Okay, yeah, so we can look into that. It's obviously going to range slightly state by state, but we'll try to get something that's like as broad as possible.
Yeah, I watched the video with Mayor, and he said he was a DIY lawyer, and those aren't my lawyers. So
yeah, I'm like, I love Mayor, and he's a savage, but I'm not trying to be a DIY lawyer. I'm trying to get a real lawyer on this, especially when there's so many parties involved. Like, the problem with double close is it just opens you up to a lot more risk, because now you got 2 parties involved opposed to just one. So it becomes a little more tricky. But yeah, in the interim, reach out to Mayor. I'll get cracking on getting the double close thing set up, and we'll have all the templates uploaded in December.
Hey, real quick about just a purchase agreement in general, and you do with it what you will, but I've mentioned it in the Slack group. I personally would take off the closing date. I would not include a closing date ever in a purchase agreement. It ties you to a date, and sometimes escrow will be like annoying, and they'll have you stick it to it. And if it's 30 days out or whatever, it's impossible to know when mail is going to hit, when you're going to get it back. So all I do is I just take it off. It just says, closing date. The deed will be delivered on or before or close of escrow. But I actually do not put a date, and I tell escrow when I send it in, I want it to close on this date, and they always listen to me. So it's like one thing and then you can push it back, or you can do whatever. It lends you the flexibility. So that's one thing I would do.
That makes sense. Okay. Just on that topic, just real quick, do y'all include the price on y'all's like intro letter? We all
yeah, I do.
Okay. Yeah, I've been doing that too.
It's like clickbait, right? Like,
right.
When you're writing marketing copy, you want to create something called a slippery slope, right? So every sentence should make them want to read the next sentence, and a great way to get them to read the rest of the letter is to see that price. So yeah, I think flexing price. I think we show it twice on the front page. I'm pretty sure. So yeah, you want to make it front and center.
Cool.
Okay, Cole, you want to pop your deal in there? Chris, do you want to go? Which one? And Mike,
mine fell through. It was the one where it had already been sold, so I don't have any under contract.
Chris,
all right.
Let's see a big one.
I do. Okay, this one's a stumper.
It better not be like that one you showed us last week.
And It is. No, I'm just kidding.
That one was heinous.
Was it a
That
bad
was a rough deal. Yeah. That was a bad one. That was a bad one. Honestly, I don't think this is a great one either, but why not? Well, everyone's on the call.
We'll all learn something here today. Let's go take a look at it.
All right, and I'll tell you why I have. So it's in Teller County. It's a good market.
Yeah, I'm pulling it up. You guys see my
Okay.
screen?
So let me walk through why I like this first.
Okay, I already know why you like this.
Okay.
Take it away.
Okay. So, one, I love Teller County. Demand is there. Why I like this subdivision in particular is there's only two things on the market, and they're out to lunch in their pricing, which means anything that comes on the market that's relatively close to correct should sell pretty quickly. At least that's what's happened in similar subdivisions that are like this. So I like that. Don't like that there's not a lot of comps to go off of. There's just not that many that have sold, which is fine because there's not a lot on the market either. So kind of demand still says it's there, or demand versus supply. And I also don't like that it doesn't have trees, but it's near like a weird pond thing.
Yep.
Anyway,
Yeah.
who the fuck knows? That's it.
Yeah, I'm a sucker for water features. Water features, as just a simple rule of thumb, will pretty much remedy any bad decision in terms of purchase price. Like you get more leads, they convert better. You can typically get a higher price. Like water. It is crappy that there's no trees. It's kind of an ugly lot, honestly, but the proximity to the water is super interesting. So this is a hair over an acre, right? Like what is it, like 1.2?
I think it's 1.3. Yeah,
1.3.
it's
Interesting
relatively flat.
topography. Yeah, not too shabby. A little gentle slope. I don't know why my map's being weird.
My map's been weird too. I actually couldn't pull it up.
So okay, gentle slope, about an acre. Is this in an HOA?
I think so, or POA,
Okay.
but
So you've got
not restrictive.
power lines running in the back. These look like I don't know if those are tracks from a car or if those are huge, large power lines. You see those?
Those
like,
are power lines. Those are power lines. So
three bands.
the guy that owns the lot that you have, he also owns the one to the right. He wants to sell both, and he's trying to price it for. Anyway, I've talked him down to just include both of them for the only usable lot, which is that one. So there are power lines that run through his lot. It's just the other one.
What's the price here?
I can get I think it was 40 is what I had it for.
Oh, okay. 40s, in my opinion, 40 is too much.
I know.
What's it assessed at?
Oh, I don't even check.
Yeah, it's obviously not an end all be all, but in a situation like this, it can help. I like the fact that there's development here. So it's a good sign. Like this is valuable enough land that people have decided to build here. It's always a great indication, especially in a subdivision. If you see a subdivision, there's nothing developed. It's usually a telltale sign. I do not like this huge power line running back here. These can be noisy. They're ugly. Yeah, it's nice that power is close to the lot, but that is a real drawback, in my opinion. A real drawback. Yeah. So you see, like, this is not, from what I can see, this is not a normal power line. I don't know if these are tracks or those are like 3 lines. You see what I'm saying?
Oh.
I don't know.
The shadow looks to be just a regular line.
It might be a regular line, but there's like these 3 bands that run along it. So I don't know. I would need some confirmation there. They don't look like, they're obviously not like industrial huge power lines. Those are like a no-go if they're close to your property at all.
Yeah.
It might just be standard power lines, which isn't a big deal. I mean, it's not pretty, but not a huge deal. I don't know what those 3
You can put them underground too.
Yeah.
It's kind of expensive.
Yeah, in a subdivision like this, though, they're already pre-set up, so it's probably unlikely that there's going to be any underground utilities. I don't know. I would need some clarification there. I would check the assessed value. Our kind of like closest comp, if you will, sold off market at 48 in October. So a recent sale. See if they have the parcel number anywhere in here.
So I'll look at the off market deals, but I kind of throw them out if they're off market because it really doesn't mean much to me. Considering like I'm doing the same thing, right? So if it's an investor coming in,
Well, yeah, we're gonna assume like so I'm always you're right. I'm gonna take him with not a grain of salt, but I'll look a little closely. But this is I would say definitely not an investor from my hunch. This looks like a normal person.
Oh yeah, that one right there.
Well, I always check who's holding title. This is a nice lot because it's got views of the lake. It's well wooded. It's on a cul-de-sac. Cul-de-sac property always does better. And this is objectively probably a little bit of a prettier lot. But you're right. I mean, off-market sales, not really the same thing. The trouble is though, is that like when you have no other comps to work off of, it's like the only thing to lean on. It's not saying that it's not here's one at 100.
So this is why it's giving me pause, and the only reason I liked it was because of water.
Is this in Spring Valley?
This is it's right next to Divide, I think.
Is the subdivision called Spring Valley? Look at the legal description.
I have one up right here.
I mean, this is close to the property. It's definitely a little bit nicer. It's wooded. They say there's underground utilities. Let's see. This was listed in March. Price changed in May. Price changed undercut. So it was on the market for a while. Yeah, my hunch is that 40 is too much.
It is Spring Valley, yeah.
Yeah, it is Spring Valley. Yeah, you're right. The people that are listed are definitely out to lunch. Way out to lunch. It's been up for 70 days. Yeah, crazy out to lunch. So let's go like, what you can do, just kind of back of napkin math here. It's not perfect because obviously prices change as the size of properties flexes up and down. But let's just say, hey, 185 grand for a 6.8 acre. Whoops, 185,000, 6.8, 27 grand an acre. Obviously, it's going to be different though because that's a bigger acreage. So the price per acre is going to shift a little bit. Yeah, my gut's telling me that 40 is too much here. This is probably like, I don't know, God, if I was in it I would like to list something like this at like, God, I just don't know, man. I mean, this is where you're getting a realtor's opinion would be helpful. I just, based on what's listed out here and what's sold, I think at 60, this probably moves. I don't know how quickly. Probably have to wait until like late winter or early spring to get this sold. So that's something to think about as well. It's pretty high elevation. So you're in at 30, like that could be a deal, or this is a double close play. But other than that, I don't know, man. 40 in this market, I think it's too risky.
No, that's good. I thought that 60 or 62 is where I would list it at.
Yeah.
Think about even that. I wasn't sure.
Yeah, think about it like this. I mean, you've obviously sold land in Teller County before, but prices for land can range from subdivision to subdivision, and we know this. But like, let's go over to our website, for example. So we've got a property out in Florissant. I don't know how you pronounce that. Florissant. So we've got a 4-acre lot at 76.9, right? And we're not like undercutting like crazy. That's pretty much fair market value, I think. And that's just down the road from Divide to here. It's right in there. So like, to think that you're going to try to sell a 1 acre at almost a 4-acre price, maybe because people like that subdivision and the water feature, but I don't know, man. I think anything past that's stretching it. So you could try to double close at 40 and list at 60 and see what happens. And you're going to get good feedback on that market. Maybe go back and try to buy more land, or if you're going to put capital in it, I'm probably at 30. When things are rocking and rolling and the market's crazy hot, you could probably get away with that. Like, So I don't know. So yeah, I think I'm walking from that deal at 40 or double closing.
Cool. That's kind of what I thought. But thanks, guys.
I'm gonna put this in the chat just in case anyone else wants to pull it up. This is in Burnett County, Texas. Burnett County.
Burnett.
Chris.
Okay, so this property is 8 acres. It's in the subdivision. $500 a year for the POA. Assessed values at 192 grand. The guy wants 95. I think in 2016 he bought it for 120. He financed it. He owes $80,000 on the note. And he wants to make a little profit. So he wants 95 grand. We haven't even started negotiating with him yet. So like, I think we could probably get a little bit lower. We offered between 68 and 120 on a range offer. I'll tell you guys where this is.
Kempner?
Huh?
It's like Kempner, Texas. Yeah.
Yeah, it's right outside of right outside of
What's that acreage you said, Sumner?
Killeen. 8 acres. So it's out by Ocala. There's a bunch of subdivisions out here. And so I got a little bit frustrated with my team yesterday because my intake manager who was pulling comps, they were pulling comps that are in close proximity to the property, but they were pulling comps in different subdivisions. And as we know, prices really can flex from subdivision to subdivision. So it's something to keep in mind. There's a lot of sales here, obviously non-disclosure state. One of these sales actually shows the sales price. I don't know which one it is. Yeah, this one right here. So this one sold for 260 grand. It's just right down the road. It's right here. And this is, I think, what is this, a 6 acre? Anyone know? 7 acres?
I'm still trying to find your lot.
I should know my acreage math. 7.45, so pretty similar size as ours. That sold for 260, and that sold, I don't know when that sold actually, but there's a 5 acre. So yeah, there's some properties in different subdivisions that are selling between like 28 and 30 grand an acre. But in this subdivision, the only comp we could find is trading at 37,000 an acre. It's at 7 acre that sold at 260. So it looks juicy, right? I'm like, God damn, that looks insane. Here's our properties just right here. It's at 8 acres, got it at 95. The one right down the road that's a little bit smaller sold for 260. It seems like a no-brainer, but I'm like, I got to be missing something here. I don't know.
When you, yes, the fact that the one down the street sold for 260 is very enticing. But to use your argument that you just used to Christopher against you, if you look at what's for sale in that area, you have a 5 acre for 110, a 5 acre for 110, a 5 acre for 122, 5 acre for 123, 5 acre for 125, 6 acre for 125. That's kind of close. 5 acre for 130, 6 acre for 147. There's a lot for sale under 150. A lot.
Yeah. So the rub
would concern me a bit.
Yeah. The rub there is those are in different subdivisions, but you're right. Like, if a 5 acres at 122, but again, if a 5 acres listed at 122, what's the 8 acre worth? 150, 170, 180.
150 is probably my number, but go down on your mouse to that bottom left one. I think that's a 7 acre. It's a 6 acre for 125. It looks like a really nice lot.
Looks like a really nice lot. So this is the comp that scared me away. I was looking at this yesterday. It's well listed. It's been up for 145 days.
Yeah.
In a different subdivision. But still, it's like, does the value range that much from subdivision to subdivision? I don't know.
Unless there's something that's really drawing people to that particular subdivision.
But you look at the lot and it's like, dude, I don't see anything special about these properties at all.
Yeah.
And the other thing is there's no development here. There's a little bit of development, but not as much as I would like to see.
The weird thing is you have like quite a few, all the sales were in not last year, the year before. There were like 6 sales.
Gotcha. Where are you pulling those up on Redfin?
I'm pulling them up on Redfin. Yeah, I don't know what price they actually sold at, but they pretty much average about 120 for a 5 acre in this subdivision.
120, yeah.
Yeah, actually, it's 135 for a 5 acre.
And what's weird is this guy, he bought it. Here's a 13 at 199. He bought it at 120 in 2016. All right, so I think it was 2016. Let's see, actually. Yeah, I actually don't know. He bought it for 109. I think it was in 2016. So I think land's appreciated since then a good bit. But yeah, this is where I'm just kind of hitting my head up against the wall on this one. I don't know. My gut tells me that if you're sinking 95 grand into a deal that gives you any pause, it's got to be a double close.
Double close. I would feel way more comfortable around the 70 to 80 area, even closer to 70. But
yeah, even there, I'm a little scared. And there's probably no way we buy this deal and he loses money on it. But if he owes 80, what is he going to take?
Oh, right. This looks like a double close then for me.
I would also call an agent on this one.
Yeah.
Someone that's like super familiar with this subdivision in particular for whatever reason. Like, why were there tons of sales in 2020? And who knows? It could have appreciated a lot, the subdivision, and maybe the demand is enough where there's nothing for sale because people don't want to sell. I don't know.
Yeah, I don't know. It's a real head stumper. I think that. Oh shit! What was I going to say? Oh yeah. So for us, for anything over 50 grand, my team always has to get realtor comps. we've been having a hard time finding a realtor that sold those properties, which is weird. But or actually, I think I could probably find them on Redfin, and maybe they just didn't pull that up. Maybe I could just give that to them. But yeah, I'm going to get some more details on it. Thought it was an interesting deal. My gut tells me that that's got to be a double close, nothing else but it. And even as a double close, I still don't really know what to list it at. But yeah, kind of an interesting one. So we've been getting a lot of deals like that, and like because it's such a big purchase price, a double close. I mean, you can make 40-50 grand on that. So it's kind of a sweet setup.
Yeah, you can get the agents info. They're all different agents, which actually I was not expecting.
Oh, really? Huh. Yeah, I'll have to go peel around and take a look at it.
Well,
Cool, guys. Anything else before we head on out of here? I know this was about a half an hour longer, so I appreciate everyone sticking around.
What is a double close?
Yeah, double close, essentially, you get a contract. You say you have it at $95,000. You go and advertise the property. You find a buyer. Let's say you listed it at $130,000. Then you send both contracts to a title company. And in theory, they close on them simultaneously. And you don't have to put any money into the deal. It ranges from state to state. In some states, you have to put the money in the deal for a day. So I put the 95 grand into this deal, and then it closes. And the next day, the new buyer closes on it, and they pay us 130, 140, 150, whatever it might be. And we make that spread in between. So either you don't have to put any money in the deal, just depending on the state, or you put the money into the deal for a day or so, and then you just close once you have that new buyer lined up. It's a little risky. It's a little tricky because you're juggling two other parties. You don't own the property, so it can be hard to market it. But if you structure it right, it can be a great way to make money in this business for deals that just don't quite fit your buy box. We've got a guy in the group that this is all he does is just double closes, and that's his whole business. So you can make a business out of it. I think it's more just a good tool to have in your tool belt.
Okay, thanks.
Just real quick, and
yeah,
you don't need to give me an in-depth answer for these properties where where you're getting HOAs, 700 a year, 800 a year, whatever. How do you feel like that impacts the value, and especially when you're selling it?
Yeah, no, it definitely does. I mean, it's not so much the price tag on it, it's more the CC&R, so codes, covenants, and restrictions. That's going to be the biggest drawback for potential buyers. There's just a real stigma in the world of landowners for restriction on their land, right? So what we look at more so than just the flat out cost is just how restrictive are those codes. So it's always worth looking at those before you buy a property. The flip side is a lot of times these HOAs, they're going to come with utilities and like amenities that can be really nice for someone to develop. So there's some subdivisions where the HOA and the POA actually adds value and it's not a big deal. There's others that are real crappy. Like for example, in North Carolina, you're going to find a lot of crappy subdivisions with really restrictive codes. Like you can only build a house that's 2,500 square feet. And I've seen some that are like $3 or $4 grand a year. So it can really, at a certain price point, it does eat into it. The stuff that's $500, $1,000 a year is not so much of a big deal. But you just want to be mindful that there's actually demand there, that people do want property in that area, and then always looking at the codes.
Yeah.
I think, sorry, go ahead, Preston. Oh,
sorry, just in regards to those codes, is there anything specific, just like what you can build, I assume?
Yeah, it's what you can build on the property, what you can do with the property. So, hey, like you can't have a RV on the property, or you can't have more than 2 cars in the driveway, or weird stuff like that. And if we look at our demographic, like these people want to go typically use the land recreationally. That's typically what they like the most. And so that's what I'm looking at. The other thing is like the building restrictions can be tough. So if the square footage is too high, that's going to be a drawback. And some of them have weird requirements. Must be single story with a garage that looks like this. But it's usually the recreational side of things that's the biggest drawback.
Understood.
Yeah.
Yeah,
go ahead.
I was gonna add a little bit to that. The one thing that I have found though, with as long as it's not super strict, like I said, you can only build like one kind of house. If it's a pricier lot, like if it's a buy for 50 to 75, and you can kind of double it from there, it's like over $100,000. You're dealing with like a more sophisticated buyer who like clearly wants to be in that area in that subdivision. So the HOA is actually like a benefit. They know there's going to be no shit houses, there's going to be no RVs. Like that is actually good, not for anything that's under that price, because you're just dealing with a different buyer. Yeah. Who just are like, oh, I like trees, I want to camp on this shit. Like, all right, whatever, man. You do. But if you get like a more sophisticated buyer, they want the structure.
Okay, that makes sense. Got it. Cool.
All right, guys. Good seeing everyone. I'll see you guys next week.
Appreciate y'all. See ya.
Yeah.